Hi there, welcome to Kneppy Invest and welcome to another ASX Daily Rundown video. Relatively speaking, today was pretty good compared to yesterday anyway. Up slightly, XJO, all odds. Small caps, really good day, up 0.8%. Tech's up about 0.5%. Unfortunately, if you hold a lot of mining companies, your portfolio might have done a little bit worse because mining or resources down 0.4%. So relatively speaking, a good day today on the market. Have a look at a tweet that I think will, I liked it anyway, because I ranted in yesterday's video about why I don't think the market is acting rational when it drops or sells hard on better than expected retail numbers. It still does not make sense to me. So have a look at that tweet from Michael Antonelli, and then we'll have a look at some of the announcements that were released today. In fact, I had about 12, maybe even 13 announcements that I wanted to look at. I came up with a top 6. The top 6 are Droneshield coming in number 1, Dubber 2, Bank of Queensland 3, Next Science 4, Evolution Mining 5, and Austco Healthcare coming in number 6. Also want to touch upon 7 other companies that released announcements today. West African Resources, Brookside, Judo Capital, Rio Tinto, Neurotech, NTI is their T code, Coventry Group, and then Image Resources. Might have a look at some charts, including AGL. That looks interesting. Zip also. I want to touch upon Zip, still remaining volatile. Also, possibly briefly touch upon the 4 Cs that have been released the last 2 days. I completely forgot to mention the 4 Cs in yesterday's video, but to be honest with you, none of these pennies 4 Cs blew the lights out or really grabbed my interest. So we'll look at about 7 of these pennies 4 Cs that have been released either yesterday or today. I should be able to go through those fairly quickly. First, on to the tweet that did grab my attention this morning from Michael Antonelli. This is what he said. The Fed isn't cutting rates because the economy isn't weak. That's exactly true. Why would the Fed or the Reserve Bank in Australia cut rates when the economy is strong? Because that could only fuel further inflation. There is a scenario where inflation really decreases and they start decreasing interest rates and inflation doesn't flare up. I could see that scenario playing out, but I think that particular scenario has a fairly low probability. It doesn't make sense. The Fed will cut rates just because inflation gets to 2 or 3%, particularly if the economy is still strong. And those better than expected retail numbers probably hint that the economy is performing a little bit better than what we expected. Okay, so the Fed isn't cutting rates because the economy isn't weak. You know, when stocks typically do well, when the economy isn't weak, there's probably a pretty good correlation between a healthy economy, a nice rise in GDP, and bull markets, and when the economy is in recession and bear markets. I'm pretty sure there's a pretty good correlation between those things. He also wrote another comment. I'm, in quotation marks, I'm selling stocks because the Fed won't cut rates. But the economy and earnings are growing, and that's exactly what's happening. Earnings are doing really well for companies all around the world. Yeah, but rate cuts. So a lot of investors and a lot of people in the market just think that rate cuts will be very healthy for the stock market, but that's not how it works. Again, the most likely time the Fed or Reserve banks cut rates, or central banks cut rates, is when we're seeing a really unhealthy economy and possibly we're moving into a recession, or maybe we're already in a recession. And usually in those times, the stock market moves into a bear market, not a bull market. So you have to stop thinking that cutting interest rates is going to be really good for the stock market. It's not necessarily true. We've seen this time and time again over history. Anyway, so that's all I want to talk about this particular tweet. And sorry about the rant again. Again, I just don't understand why the market went down a lot yesterday because of better than expected retail numbers. Just doesn't make sense. Anyway, let's have a look at what happened in the market today. Still got 30 minutes of trading, so I really want to do this video in 30 minutes. I don't think it's going to happen. Anyway, so let's have a look at the sectors, and to really speed up this, I'm not going to focus too much on the sectors and indices here, but utilities up 2.7%. I have a feeling utilities has done well today because of AGL. There's not many companies in the utility sector. You can see all the companies in it. So does it? Yeah. So here's all the companies in the utility sector. If you list it by market cap, so we have Origin Energy, 16.9 billion, APA Group 10.7, Mercury New Zealand, Meridian Energy, AGL Energy, and AGL Energy is up 6.2%, Origin up 2.7%, and LGI company I do own up 4.8%. Although in saying all that, Mercury New Zealand is down 5.1%. So really all the heavy lifting is being done by AGL Energy and Origin Energy, and that's why utilities has had a really good day today. Discretionary up 0.8% after having a really bad day yesterday. And again, that doesn't make sense. Better than expected retail numbers, which probably is good for retail companies, yet discretionary was down. Now, maybe in Australia we don't have or won't have good retail numbers, but what happens in America sometimes happens to us. Otherwise, IT up, real estate up, and the only three sectors down: healthcare, materials, and energy. And yeah, that should not be a surprise because we already seen that resources has not had a good day. Gold, in saying that, gold has had a really good day, up 2.2%. Small caps a good day, and tech another good day for those. We can have a very quick look at the ASX 200 or 20, not 200, just to see which companies have performed well. 12 down, 8 up, and based off percentage changes. So it looks like insurance companies had a good day, banks had a good day. Some of the bigger companies had a pretty good day, but the worst performing companies, BHP's there, Woodside, James Hardie, Santos, Macquarie Group, Transurban, Aristocrat, and CSL. So sort of a a day when it comes to the biggest companies on the ASX. Now, before we move to announcements, I'm just going to go quickly through the top performing companies and the worst performing companies, just to see if I've missed anything. We'll look at this by percentage change and by market cap. So I'm going to go through this fairly quickly. I might miss something. There's Droneshield. So Droneshield is one of the best performing companies, and it comes in at number one of the announcements I want to talk about. In fact, it's not really the announcement I want to talk about, but just the market reaction. Otherwise, nothing else there. Now let's have a look by market cap. Evolution Mining. So it comes in at number 5. AGL, I want to look at the chart for that company. I think it has broken out. There's Droneshield. Pantoro, I talked about Pantoro yesterday, so I'm glad it is doing well today, even though I did not take a position. Definitely a company to follow from now on. And Next Science, another company I want to talk about today, up 13.2%. Now let's have a look at the worst performing companies today, just to see if I've missed anything. There's Dubber coming in number 2 on the announcements I want to talk about. Although, to be fair, it's not really an announcement. You'll understand why. Down 71.8%. To be fair with you, not a shock. Not a shock at all. I actually did tweet about Dubber because they're back to trading. And I fully expect the share price to fall that amount. Austco down, I don't. Although market cap has a market cap of 1.34 million. We won't look at that. Any other companies here? No. Nothing that I can see. Let's look by market cap. And nothing that really screams out to me that I've missed something. Okay, so that's good. So we've just seen the top gainers and top losers today. Now we can focus on the announcements that have been released today. I'll start off with the companies that didn't quite make it into my top 6, starting with West African Resources. Now, this was an interesting one because they were up a little bit, and I expected a better reaction because they released an announcement, mining drilling results. West African Resources intercepts 24 meters at 55.8 grams per ton of gold at M1S. Now, by my inexperienced or amateur drilling results readings, these results have looked really, really good. And I can't emphasize the really, really good enough. I think these results have looked absolutely stunning. But again, I'm inexperienced. I would call myself an amateur. So I just want to see how the market reacted. And you can just see the market reaction was quite muted. Now, in saying all that, the chart for West African Resources has been an absolute tear because of gold. And this is the weekly chart. So let's have a look at the daily chart. So it looks pretty good. But if you do go back to the daily chart, you just notice that it's in an area of resistance. Yeah, you can see the share price was at these levels back in 2021, 2022. So, it's not surprised that we do see a little bit of weakness in West African Resources at these particular levels. However, they look really good results. So again, I have to do more research on how to read results because, this just look really good. 24 meters at 55.8 grams per ton. So maybe I'm missing something. Now on to Brookside. Now, for full disclosure purposes, I own West African Resources. I also own Brookside because I think this company is potentially really cheap. Now, there's a lot of negative sentiment in this company. A lot of shareholders who own this company absolutely hate the management, that sort of thing. And I think that negative sentiment is suppressing the share price. That's all it is. If all those negative shareholders suddenly left the registry, I think the share price of this company would go on absolute tear. So the company has a market cap about 70 million, if I remember correctly, about 70 million, we'll say. Have about $30 million of cash, 20 or $30 million of cash. Chart doesn't look that good, although it's been on a little bit of a run last month or so. A very small run, not an amazing run. You can see that by the daily chart. It's gone from 1.1 cents to 1.4, 1.5 cents. You can see a lot of shares on issue, about 4.5 billion shares on issue, and they're doing a share buyback, and even the negative shareholders hate the share buyback, which is ridiculous because this company is really cheap right now. So why do I think they're cheap or potentially really, really cheap? So let's have a look at the announcement they released today. I don't know why I opened up a new tab. Don't have to do that. So Swish fulfilled development to grow output and net income. Okay, so whatever. But they just mentioned some numbers in this particular announcement. So here's some numbers. At the particular price of oil and gas, this particular project, we'll call it Swish, is expected to deliver revenue of $104 million and net income of $51 million for financial year 2028. So they're looking ahead for the next 5 years. And they also have a nice little graph of forecast net production increasing over the next 5 years and forecast revenue and net income increasing over the next 5 years. Now, one of the reasons why many of the shareholders are very negative on this company and the management is simply because the share price has not moved. And what happens when there's really a lot of negative sentiment in the company? The share price has much harder, finds it much harder to move up because of that negative sentiment. And you do see persistent selling. So it's sort of like the management's not doing anything wrong. It's just that the negative sentiment is keeping a lid on the share price. So I bought some shares in this company at 1.2 cents, and I'm willing to hold the next 5 years just to see how this company performs. Because if they reach their goals, this company is ridiculously undervalued right now, just based off their projections. Now, whether they reach those projections is another story. Okay, let's look at Judo Capital. So again, I own this company. And thankfully, after this, I don't own any other companies I'll be mentioning in this group of 7 that I don't own, apart from Image Resources, which I bought yesterday. So I do own Judo Capital. Judo grows lending book to $10 billion. I won't open up this announcement. It's just a round number. And that's why they released this announcement. Lending book up to $10 billion. Chart looks pretty good. Still looks good, even though it's been weak over the last 2 days. And that's true for most companies. But still in an uptrend. I have a sell price at about $1.23. Current share price is $1.34. Just went up right then as I was looking at it. So I'm in profit with that company. And that's all I want to talk about when it comes to Judo Capital. Good announcement, but didn't quite make it onto my top 6. Now Rio. Now this company released results, first quarter results, I think it was, yes. Market has not reacted. I see this a lot for these bigger mining companies. They release production results and the market doesn't really react because typically there's no surprises in there. So many brokers cover these companies. You might have 20, 50 brokers cover these stories of these companies, and typically when they release production results, it doesn't surprise the market. You have to go down and the mining spectrum and to see or find companies that might go up or down strongly on production results, because those production results might surprise the market, and they might surprise the market because there are way less brokers following following that company. Now, in saying all that, Evolution Mining also released their production results. Now, not to give anything away, those production results, in my opinion, were quite stunning, and that's why it made it onto number 5 on my list. Maybe it should have been number 2 before Dubber. Anyway, so Rio Tinto, not much reaction from the market. Should I look at the chart for Rio Tinto? Yeah, let's have a look at the chart for all these companies that did not quite make it onto the list. And Rio Tinto, chart looks, whatever. Now, if you look at the weekly chart for this company, a long-term uptrend, Now, that's from the bottom of the cycle. The bottom of the cycle was in 2016. Maybe we're towards the top of the cycle. Maybe not. In fact, if the long term, well, actually, if you go back further enough, share price of Rio Tinto was $124 back in 2008. Now it's $128. So it's all perspective. But the weekly chart does look pretty good over the long term anyway. For Rio Tinto, NTI. This is an interesting one. Neurotech International. There's only one reason why I wanted to focus or look at this company a little bit more closely. They released some results and at the same time decided to do a capital raising. But it's this announcement released at 9:50 a.m. Positive top-line Rett syndrome clinical trial results. It's Rett syndrome that drew me in because of Neuren Pharmaceuticals. And then I open up the announcement, and lo and behold, they actually mention DAYBUE, which is the only FDA-approved Rett syndrome drug, which was developed by Neuren Pharmaceuticals and now is being sold by Arcadia. So in the third key point here, which is really interesting because this could be a competitor for DAYBUE in the future. I'm not sure how long it has to go, but CGII compares favorably, zoom in a little bit, compares favorably to the only FDA-approved Rett syndrome drug, DAYBUE, trofinetide, phase 3 CGI-1 data versus placebo in Rett, whatever, 8% improvement. So they're just saying here that this drug did better than DAYBUE. So potential competitor for Neuren Pharmaceuticals. First time I have ever heard this company or even looked at this company. And let's have a look at the chart. Is the chart looking good or looking bad? Ooh, oh, hello chart. Chart looks pretty good. So I have looked at this company in the past because I put a resistance line right here at 12 cents. And the share price is struggling to get above 12 cents. And it's been struggling to get above 12 cents for the last month and a half. Yeah, okay, so I have had a look at this company, maybe just the chart, not the company itself. What's the market cap of the company? About $100 million. Chart actually looks pretty good. Since the start of 2024, share price has almost doubled from 5.5 cents to a current share price of 10 cents. So not quite doubled, almost doubled. So that's a company to maybe have a look at. I don't think they've got any revenue. I'd be surprised if they do have revenue. I could be completely wrong. But anyway, I've never had a look at Neurotech before, Neurotech International before. Coventry Group. I looked at Coventry Group the other day because they do an acquisition, and I thought that acquisition looked pretty good because that particular acquisition would improve Coventry's margins. And I do like those sort of acquisitions, and the market likes it as well. Up 4.42% because they have completed their placement. And when a company does a capital raising, you have to wait until the company completes the placement and then shares start trading again. But the main thing here, share price up 4.4%. So the market likes it. I liked it. So let's have a look at the chart. This chart looks pretty good as well. Nice little dip after a really good run up in share price. And now the share price is on an increase again. So this chart looks pretty good as well. Coventry Group. So I like the acquisition and the chart looks pretty good. I'm going to put this into my buy Australia watch list. And finally, Image Resources. I took a position in this company yesterday at 9.5 cents. Share price up to 10 cents today, 7.53%. Now, they went into a trading halt just before I started recording. So I was thinking this trading halt might have been because the share price has gone on a bit of a tear recently, but it's not. It's to do with some pre-feasibility study results for the companies Yanaduka Mineral Sands Project. I had no idea this was coming up. And if I knew this was coming up, there is a possibility that I wouldn't take a position in the company. So just luck if these pre-feasibility study results are really good for the company. Just luck. But based off what's happened today, if there is loose lips, maybe it's going to be good because the share price has rallied today. And if we look at the chart looks pretty good. And you can see why I've taken a position in this company. A long-term downtrend, sentiment has suddenly shifted from highly negative to highly positive because of a few announcements the company has released, increasing volume, everything looks good for Image Resources. And the time to buy this company was around 9 cents. after a big update. I think I've already mentioned this, and the share price went sideways. That means there's not much selling out there in this company's shares, and I think that was proven today. Not much selling for Image Resources. Now let's have a look at the 6 companies I want to focus on in terms of these companies releasing announcements. We'll start at number 6, Austco, AHC. This is sort of announcement I'm always looking for. Now, the market hasn't reacted as strong as I thought maybe it would. So let's have a look at the announcement and what drew my attention to this company. Austco Healthcare, third quarter trading update. Exactly the title I want to see. And if I see that sort of title, I'm going to open up the announcement. And this looks pretty good. So they're looking at the first 3 quarters of the year compared to the first 3 quarters of last year, and everything's up. Revenue up 28%, EBITDA up 109%, and profit up 353%, albeit on a low base, but up to $2.8 million from $0.6 million. But what drew me in even further was a comment just below the table. The profit reported for the first half was $1.2 million, which highlights that we have generated $1.6 million in profit in the third quarter, arising from increased revenue and improved margins. Exactly what I want to see. Increased revenue, improved margins. So I'm thinking of taking a position in this company just based off this particular trading update. So let's have a look at the chart for Austco Healthcare. Now, if the market cap of this company was, say, 30 million, I would be right in. Market cap of the company is about 60 million. Yeah, about 60 million. And share price is in an uptrend, but a very slowly developing uptrend. A nice little day today. Today would have been much better if the share price didn't go on a rally in February. The share price went from about 20 cents up to 24 cents and then right back down to 18 cents. I'm not sure what happened in those few days, and there was high volume as well. So this is a good sign for Austco Healthcare. I don't even know what they do. I should have a closer look at what they do, but a good announcement from the company. Exactly the sort of announcement I am looking for. Now on to Evolution Mining. This announcement is good. I expect the share price to be up a fair bit. We already know it's up because it's in our top performers. I think it was in our top performers. Yep, up 8.1%. March quality report. They also released another announcement. Drilling results expected to drive mineral resource growth. So maybe the share price is responding to that announcement. But I opened up the quarterly report without opening up the other announcement, and I just went, this looks pretty good. On the surface, this looks pretty good. I'm trying to remember what looks good. So let's have a look at this table down here. Okay, so there's a lot here. So gold produced up 15%, copper produced up 42%, all-in sustaining cost down 10%, all-in cost down 8%, all-in cost margin up 40%. So everything, and that's the whole reason I thought these are pretty good results. Everything in that particular table for the March quarter. Now, whether they continue down this path remains to be seen, but a really good quarter from Evolution Mining. Group cash flow up 7.5% to 85 million. Gold production up. North Parkes generated $37 million in net cash flow in the first full quarter of ownership. So potentially that's why this was a good quarter, because they made an acquisition, North Parkes, and that has led to a really good quarter for this particular company. So let's have a look at the chart for Evolution Mining. And I'm pretty sure, actually, chart should look good. So look at that. So back in January, the company released something negative. Share price dove 17% on that day, fell all the way to $2.90, and then has recovered really nicely on the back of something they released in early March. Share price started going a bit of a tear. And the share price, not quite all-time highs. Oh, very close all-time highs. That could be wrong. Oh, nowhere near all-time highs. Sorry, nowhere near all-time highs, but near-term highs anyway. And this could be almost a breakout. And one of the reasons I go through this whole process is to look for potential breakouts. So this is a potential breakout. I will put this onto my bye Aussie AUS watch lists. So good announcement from Evolution Mining. And maybe the drilling results expected to drive mineral resource growth is a reason why the share price of this company went on a bit of a tear. Coming in number 4, we have Next Science. This company has released a few really interesting announcements the last few days, which the market has taken notice to. So publication of studies showing BlastX increases NPWT efficacy. No idea what that means. Study published showing impact of experience on SSIs. Preliminary results of further experience studies released. You can see the share price up 10.5%. Let's have a look at the trade history of this company. So share price went up 11.8% on the 15th. So that was in response to, well, maybe no, it wasn't. So anyway, so I opened up this particular announcement and yeah, most of it went right over my head, to be honest with you. So it's really only the chart and just what's been happening the last week or so that's drew me in to next site. So 3 good announcements, or what seemingly good announcements in a row. So for instance, this particular announcement just states they announced they released the preliminary results from 2 retrospective studies, an orthopedic surgeon, which found experience to be efficacious in preventing periprosthetic joint infection in patients undergoing knee and hip arthroplasties or joint replacements. So pretty big study. And the market just likes this company right now. So let's have a look at the chart. And I could almost tell the chart did look pretty ugly before this particular week. Yes, well, actually not. I'm being a little bit unfair. The chart really looked ugly, long-term downtrend. The lows were 20 cents, reached in October last year, but I think the low has been set. I think the low is in. Share price is starting to go up, and today this positive reaction is a breakout. I'm calling it right now. It's a breakout. It is breaking out. So if you get rid of the ribbons here, share price is now at almost a 6-month high. I'm going to call it a 6-month high. The last time the share price was this high was back in the 20th of October. So that's 6 months ago. I'm calling it right now. This is a breakout. Another company to put on my Aussie or bye-bye Aussie watch list. So it's not to do with the announcement itself. It's just the chart is starting to look good, and sentiment in this company is starting to shift from negative to positive, not the other way around. Silly man. Coming in number 3, we have Bank of Queensland. They released results today. You might think the results are pretty good. Share price up 5.4%. No. Well, more than likely the results are better than expected, but the results on the surface absolutely horrible. So let's have a look at the results. So statutory net profit after tax up on the previous corresponding period, but cash earnings after tax down 33%. Net interest margins down 3 basis points. Housing loan growth down 1%. Business loan growth stable. A dividend 20 cents. Cash earnings per ordinary share down 33%. Cash operating expenses up 6%. Cash return on equity 5.8%, down from 8.4%. Common equity Tier 1 CET1 ratio down 15 basis points. And they do mention total income declined 12% from the prior comparative period, driven by lower margins due to competitive pressures in a contraction in lending, while expenses increased 6% due to inflation and continued investment in risk, compliance, and technology. So it looks pretty bad on the surface. So I was really interested to see how the market reacted, and the market reacted pretty well. So not as bad as the market thought it was going to be. That's the main thing. So on the surface, it looks pretty bad, but that's not the reason why the share price would go down. If it surprised the market to the upside, then the share price would rally, and that's what we've seen with Bank of Queensland. But in saying all that, the share price has fallen a lot the last 2 weeks. It's fallen from $6.40 all the way down to $5.80, and now we've had today some high volume coming in, but not a breakout back into the trading, sort of a trading range for Bank of Queensland. And to be honest with you, a low quality company on the ASX, if there was one, Bank of Queensland. I was trading this, no longer trading Bank of Queensland. I got out today, by the way, I just took the rise in share price just to get out at a no loss. Anyway, coming in at number 2, we have Daba. We already know this share price of this company is down 70.9%. Hopefully you've been maybe not following what's been happening with this company, but at least hopefully you know the things that have been happening with this company. What was the guy? I forget his name. Where is it? Dismissal of managing director. What was his name again? I forget his name. My memory can be bad sometimes. What was his name? As soon as I said, I'm going to go, McGovern. That's right, Steve McGovern. So there was like $20 million just missing, and from the company's trust account or something, and looks like that the old CEO and the trust account put that money to a use that wasn't advantageous to the business or something, or the company, to something like that. That's why he was dismissed, the CEO and managing director, and they've got a sort of a interim CEO and managing director, and then they had to do a capital raising. What was a capital raising price? I forget. It was a significant discount. So we know just based off the capital raising price, the share price was going to drop a lot when they went back to trading. And what was the capital raising price? It should be in here right away. It should be. Was it like 6 cents? 7 cents? They should always have the price straight away, not upgraded guidance. Here we are. 5 cents. So 5 cents. So in fact, it's only 6.4 cents. So it could have been worse today for Dubber and shareholders. The low today was 5.5, the high 7.1. So right in the middle there. I'm not even going to have a look. Now I'm going to have a look at the chart. This is an ugly chart. There's no reason anyone should be holding this company before they went into a trading hold. Although someone might have been excited by this little bounce in January and February, and maybe that's why some people entered into Dubber. They thought the share price was breaking out, and I probably would say, yeah, wouldn't blame him. But look at that chart, an ugly chart from share price falling from $4.20 to 6.4 cents. An ugly, ugly looking chart. And finally, we get to Droneshield. I did send out a tweet about this. So a lot of up 17.99%. A lot of people panicked just over a month ago because the directors sold. Share price fell below 60 cents. Yes, 60 cents because directors sold. In fact, let's have a look at my tweet. I'm getting more followers. Here it is. Here's my tweet. So Droneshield, I spelled Droneshield wrong, and I can't edit Twitter because they won't let you edit. Well, maybe I can't edit now because it's too old, but they won't let you edit unless you pay. So Droneshield opens above $1. Remember when directors sold some of the shares and the market panicked, sending the share price down 14% to below 60 cents just over a month ago? Director selling is not necessarily a red flag. A lot of people panic. A lot of people think when directors sell, it must mean the company is not performing or something bad is upcoming. So hopefully you've realized that's not true. Now, the reason why the share price is running today is because they released an announcement. NATO framework agreement signed. I didn't even open up this announcement. NATO framework agreement signed. That's all I need to know why the share price is rallying. NATO. Anyway, so let's have a look at the chart for Droneshield, and this chart is going to look absolutely wonderful. And for those who don't know, I was trading Droneshield, and then I sold out of Droneshield, and then I bought back in for a longer term position. And I'm glad I did that now because my position is up now over 50% from when I bought back in at a higher price when I sold to take profits when I was trading this company. So a beautiful looking chart, really good volume coming in. And those who panicked and sold out when the directors sold, which was around about the 4th of March, maybe it was the 7th of March, share price on that particular day fell to a low of 58.5 cents. And now the share price is almost double that. Anyway, that's all I've got in regards to announcements. Don't even have to look at Droneshield. That was a positive announcement. We know it was positive because of the market reaction. Now, I'm quickly going to talk about those Appendix 4Cs that I completely missed yesterday and that were released today. So let's have a look at the announcements. So we go to Tools, Company Announcements. I won't have a look at Appendix 5Bs because nothing has been released. So DPLO, Nexus, Sunrise, Aruma Resources, DPLO, Australian Rare Earths, release their Appendix 5Bs and quarterly activity report, but most of these companies, if not all these companies, do not generate any receipts. So let's have a look at the Appendix 4Cs that were released over the last 2 days. Commitments, Test, Entity, Quarterly Reports. Let's go back to yesterday. So that was 4. I completely forgot about Oliver's Real Food. And to be honest with you, I don't really care. So the companies that released an Appendix 4C yesterday, Forrester Group, Harvest Technology, Love Group, and Oliver's Real Food. Now, funny enough, Love Group and Oliver's Real Food both were operating cash flow positive. So that should draw me in, but I just don't like the business model of both companies. So Love Group should be fairly obvious what they do. They're a matching type company. So trying to find love for people out there who are single and lonely. And one of the reasons I don't like that business model, I just don't like that sort of business. And when you look at the receipts of that company over time, it hasn't really increased all that much over the last 5 years. Oliver's Real Food has been under stress over the last 3 or 4 years as well. And I don't really like the business model of what they're trying to do. Their food is subpar. Anyway, and the other 2 companies, Forrester Group, I had no idea what this company is. So I did have a quick look. Harvest Technology had receipts of about $700,000, so not quite high enough. They're not operating cash flow positive. And really, the receipts aren't really growing at all good clip. So Forrester, sort of interesting. So they call themselves a supplier of natural and renewable biominerals and biomass pellets. It has developed a proprietary process to naturally extract pine chemicals by employing the tree's own solvent chemicals to extract rosin, and terpenes, whatever they are. I have no idea. Okay, so sounds sort of interesting. And then I had a look at the Appendix 4C and I went, okay, let's move on to the next company. Because receipts to customers, $6,000 in this quarter, first 9 months, $55,000. Time to move on, and operating cash flow negative. So this is just a story stock right now. And I don't want to focus too much on story stocks because the future is unknown. And the greater chance is the majority of these companies that are story stocks won't make it in the end. That's just by probability. So let's have a look at the announcements today. There are 4. So 4 yesterday, 4 today. Proteomics, Novonix, Little Green Pharma, and Proteon Energy. I'm not going to have a look at Proteon Energy. Let's have a look at the other 3 quickly. So again, the first thing I always look at is receipts. So I want to go straight to receipts. So Proteomics International has a bit of commentary there. And is this company growing receipts, and or is this company operating cash flow positive? And the answer to this company is no. $173,000 in receipts, operating cash flow negative by $2 million. Move on to the next company. This is exactly what I do, particularly towards the end of the month. Novonix. So I know there are quite a few Novonix fans out there. I would say share price is flat. Well, the time is 4 p.m. So we're in the closing auction right now. So all these companies haven't done much today. Anyway, Novonix. I don't care about the highlights and all that jazz. I only care about one thing. Cash flow. So let's have a look. So receipts to customers up to 2.1 million. So possibly you might be a little bit more interested in this company because this company does have growing receipts. I won't show you the receipts history of this company, but it is growing. This might be the first quarter with above $2 million in receipts, but they spent a lot. $6.6 million in staff costs, $7.3 million on administration and corporate costs. That's in one quarter. Thus, they were operating cash flow negative by $13.2 million. I need to see proof of concept for Novonix. I'm not just going to buy some shares in this company on blind faith. I need proof of concept. Maybe the share price will be significantly higher than it is now if they do achieve that proof of concept, but I need to see that they are able to become operating cash flow and free cash flow positive on a continuing basis, because at this point in time, this company is burning through a lot of cash. Still have a fair bit of cash on hand, if I remember correctly. Yeah, still $62.2 million of cash on hand. But if they keep going down this path of burning a lot of cash, they will have to do, more than likely, capital raising. Although they are getting funding. They did mention some, in this announcement, if you go to the top, they did mention some big funding they are getting from the government or something. Selected for $103 million qualifying advanced energy project tax credit for Riverside facility. So yeah. Anyway, move on to the next company. And the next company is Little Green Pharma. Okay, so this was a little bit more interesting. And for an instant, I was attracted. Not attracted, but this company did pique my interest for a second. So why did it pique my interest for a second? So receipts of customers, 8.1 million. Typically what I do is I look at the operating cash flow and just thought I saw $4.1 million operating cash flow positive. And I went, whoa, okay. Then I went above to 1.7. Government grants and tax incentives, $5 million. Oh, and I went, at one point, for one brief second, this company did look promising. So nice increase in receipts, or maybe it's not increase in receipts. Says year to date, 12 months. So maybe there has been an increase in receipts. I think there was, if I remember correctly. I put these numbers into my spreadsheet, but they're still operating cash flow negative if you take away, and you should take away, government grants and tax incentives, because that $5 million is not something they're going to get every single quarter. So little green farmer, not quite there just yet, but this was a company that probably piqued my interest the most just because of the receipts and growing receipts. And the chart does not do anything for me. You might say the chart is now flatlining, going sideways or consolidating. So maybe the low has been reached for little green farmer. Otherwise, the Novonix chart looks pretty good. So just have a look at the Novonix chart. Probably should have looked at this when I was looking at Novonix. This chart does look better. A little pullback. This pullback could be an opportunity to take a position in Novonix. I'm just saying right now, a nice little pullback. Time to think about buying some Novonix shares. Okay. I'm going to end this particular video looking at two charts. AGL, potential buy or potential breakout. So what I'll do is I'm going to get rid of the MA ribbons. And if I just put that there, that's better. So this is a potential breakout. Yesterday's share price was down 3.3%, and now it's rallied about 6%. Share price just above a nice little resistance area or zone at $9. Share price is not at a 6-month high, only a 4-month high. So that's the one slight concern. I do prefer at least a 6-month high, but just the share price action today, lower volume than yesterday. That's another little red flag, but nice share price action today. Good volume, relatively speaking, compared to last 2 weeks, but again, a little bit lower than it was, or less than it was yesterday. So potential here for AGL Energy. Now let's have a look at Zip. So I stopped following Zip. I was looking at the share price of this company during the first hour on a relative frequent basis, but then I stopped following when the share price fell to about $1.15. So let's see if there was any bit of a bounce. There was actually a nice little bounce today. So 1 minute chart. Yeah, there was a nice bounce. I think the low has been reached for Zip, potentially. Although saying that, potentially the bounce is to a nice little support or resistance area. So possibly the low has been reached for Zip up to $1.18. Let's see, because we're in the closing auction right now. Will Zip... Oh, there could be a little bit of selling pressure in the closing auction. Indicated price at $1.17. It closed at $1.18.5. So there was a little bit of strength in Zip during the past or the last few hours of trading. And the chart actually, if you just look at the 1 minute chart, looks actually pretty good. Looks pretty good in the last, we'll say, the low was reached at 12:30. So it actually does look pretty good in the last few hours of trading. So if I was a day trader, I would be maybe gotten in at around $1.14. So higher highs and higher lows. Yeah. I just want to wait till the closing auction, but still 2 minutes to go. I'm not going to wait. You can look for it yourself. Look at it yourself. Anyway, that's it for today's video. Hope you've enjoyed it. If you have any questions or thoughts, leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.